Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you had a good week. Checking back in on Canadian MJ. We're going to look at WEED, ACB, APH, MJ, NFIRE, EMH, and we're going to look at some different time frames as well, because you really need to zoom into the hourly and the 4-hour and shorter term time frames to get a complete picture of what's going on. I've been using the 15-minute time frame a bit more for Canadian MJ during these tightening patterns and setups, and I have been finding it useful. So for WEED, we have a tightening pattern on the daily time frame we're watching for a break of. We had a really good end of the week for most in the sector. So we have our all-time high, low of the pullback, lower high, higher low, and this 1919 level, you could consider that the lower high in this equilibrium pattern. So really, essentially, there's 2 degrees of strength on the break. 1919 breaking was a bullish signal that the earlier traders, or I should say higher risk, higher reward traders, would act on and get in. And I personally do have some WEEDs because of the strong close. I'm going to head into next week with that because we have that break and going to take a little bit higher risk stance in the market as it is bullish overall. But it's really this level right here, 2035, because if we break that level, we very clearly have a higher low and a higher high since coming off of that all-time high. And that will have us looking back at just 2075, 21, and 2172, the all-time high, as resistance. The Bollinger Bands are pretty tight, needs to level out and begin ascending to create some room to the upside, and we should see that begin next week. And we're also keeping an eye on the MACD, which could get a bullish cross if we see some further upside towards that $20 mark. That $20 psychological level will also be a battle that is likely to occur sometime early next week. We did have a little bit of news towards the end of the week, and that did give, I believe, that Friday little bump for the bulls that we saw. This is very healthy consolidation for WEED. This is a bull flag on the weekly, and we're holding exponential support, and we very easily could see new all-time for highs from here, which is why I want to give myself that opportunity to profit, and I will exit with a small loss if things turn around and we're unable to break 20. But as of right now, I want to be in because we are so close to a potential all-time high, and really just a 10% day would get us right up to that level. And I know a 10% day hasn't happened in a bit, but just a couple 5% days would do it as well. ACB, bulls also showed up, and ACB has been a nice play for us because we were looking for the equilibrium pattern, and it's nice because the sector leader, WEED, has been in this pattern for a month at this point. So we had a heads up to know, okay, the sector's consolidating most of the names. Of course, ACB and APH have been doing their own thing, but if the market leader is doing this, I'm going to be looking for equilibrium patterns to form on other names as well. So the all-time high, low of the pullback, lower high was $8. Now we have our higher low, 631. So as we were approaching oversold conditions after 5 red days in a row, the hourly chart got oversold. And let's look at ACB here on the hourly, where we had the bounce initiation, and we were looking for this bounce. Look at the RSI down on the hourly in the low 20s, and we were using the support level and assuming that we're going to stay in an equilibrium pattern. The odds that we're already down in a 20 RSI position and break that low, and then we're going to head to, close to single digits hourly RSI is just not likely in the sector recently. So 610 is support, and we formed a higher low compared to that level at 631, and then the bounce played out. And we were playing this bounce on Thursday, and it didn't end the day with momentum. But we knew, looking at the hourly chart, we said, okay, we're coming off of the low. We're not going to change the trend on the initial bull move. We have to consolidate, form a higher low, and then a higher high. So we knew how important it was on Friday for first thing for the bulls to break 694 to see continuation, which they did do. And that now gives us on the daily time frame that bullish reversal candlestick, the confirmation, and we're still in a tightening pattern. So when this bounce began, we started to set a target in the 740 to 750 area, and that's just visually looking at where we would make it to form a lower high to stay in this equilibrium pattern. It's a bit of an educated guess. So we're staying on this middle Bollinger Band support, looking for follow through with a break of 723 first thing Monday, and from there we're looking at 739 and 751 as 2 resistance levels. The weekly time frame is an inside bar showing the tightening range, but we're still in breakout mode. So we're tightening up in a healthy pattern, and if WEED heads to all-time highs, ACB will likely break this pattern bullish as well, but it has not tightened as much as WEED, so there is the potential that we get a sector leader breakout, and then we look for these laggards, maybe if they're a couple days, a day or two behind, they'll follow as well in terms of breaking their key resistance and going back to all-time highs. APH is still a bull flag. And the gap up day, definitely too significant of a gap up. Took a decent loss on that day trying to play that momentum. And, was very profitable in the first 5 minutes. But then once it turned around very quickly, hard to exit without taking a loss. But there's been opportunities on that ACB oversold bounce and on this WEED bull break to make those back. So as long as we keep those losers small, there are certainly other places to make it back. So consolidation, key support, 1287 at this point on APH. That's the low of the pullback. Like I said, it's very healthy consolidation. We're holding exponential support, trying to see follow through. It's an inside bar on the daily. So on Monday, a break of 1315 is bearish and a break of 1358 is bullish. After 1358 is 1389 and then just the all-time high. So there's a lack of resistance up here, just like pretty much all of these names where we stand right now on the big three have a lack of resistance before we get to the all-time highs. APH on the weekly time frame, full-on breakout mode due to that news momentum and still going, but wouldn't be surprised to see an inside bar form this week as well, as we still see a tightening range. MJN is one of the strongest charts. Well, there's a bunch more strong charts now on these smaller names, but MJM gave us that bull break of these inside bars. This is what we highlighted in the last video to be watching for. A bull break of 427, and now we're closing up at the high of the end of the week, and the all-time high 478 within striking distance, but we have to watch the upper Bollinger Band, which is tight, and same thing, it needs to flatten out and then begin ascending to create room to the upside. Weekly chart still above the upper Bollinger Band in breakout mode 4 weeks in a row, so these bulls are really strong. As long as we hold this middle Bollinger Band on the daily, we're looking for the bullish MACD cross as well, and there's nothing to worry about as long as that daily middle Bollinger Band holds. FIRE, already in a very tight pattern. Key support is 185. If that breaks, we're going to see a move down into the 170s. And resistance after 191 is, there's a bunch of resistance, 196, 97, 98. And those are all in a row, right under $2 psychological. So essentially, once FIRE breaks $2 again, if I were not in a position, I personally would be waiting for that signal. I would probably buy the wall breaking at $2 for my entry. If you are in a position, I personally would be exiting if 185 breaks and looking to reload cheaper. So a tightening pattern on FIRE as well on the weekly time frame, a very tight inside bar, and 185 and 197 is the range to be watching there. EMH has been in breakout mode on the daily time frame. Nice big bull move up, healthy consolidation, new support established at 360. Inside bar on the daily followed it. So tomorrow, or I should say Monday, 372 support and $4 is the range to be watching. If we get a bear break under 372, 360 is that key level, and if we break 360, we could look for a bit more pullback because we haven't consolidated significantly at this point. But again, this is very healthy consolidation, and we could be easily going for continuation because like the sector, we're all seeing a correlation. Lots of names closing at their high of the day to end Friday, and we know that usually favors some bull momentum heading forward. So EMH on the weekly time frame looking similar to APH in terms of the strength of the breakout, little consolidation, and no looking back with all this bull volume behind the move. So as long as these daily charts form and keep holding these higher lows, bulls have absolutely nothing to worry about. And then we have tight, clear patterns where if they break, it will be very clear that the bears are taking the short-term momentum. So support's pretty established on the sector. It's always comfortable when we have those levels that we can easily refer to and know if things are staying in favor of the bulls, and want to start this week off on a good note for those bulls and follow through, break the highs of Friday, first thing on Monday, and see a little bit of a push up. This is great volume on WEED. The fact that it was Wednesday and Thursday, very low bear volume, and then the bull volume spike on Friday, good sign. And best case scenario on Monday would be more than 8.5 million shares traded and a move up to $20. So we'll see how it plays out over the week. Certainly still bullish on the sector overall. Always cautious. I've been slowing down my trading while we're in these consolidation patterns, still playing oversold bounces and such. And I will see you in the coming days or next weekend. Thanks for watching.